Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management. This past week has been pretty much a steady as she goes kind of week, although today the market has hit a new high. So there is really little to discuss in terms of changes, although there is a massive ongoing wave of terminations at Alphabet as the company looks to AI to replace the need for many employees, some with service going back as long as 20 years. And at Apple, the EU is forcing the company to vastly reduce its fees to app providers, which has been a huge source of almost pure profit to the company for some time. Second, last week I observed that presidential election years tend to be bullish for the stock market, and that certainly is the case today. Given the strong support from the U.S. Federal Reserve Board in terms of de-risking the economy and the stock market, I expect that the FANG specifically will largely go along for the ride. But right now, what we really need to do is take a close look at those FANGs and what has been going on. But as always, before I do that, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon, and I wanted to give you a little bit of perspective here for what may be coming. And what I'm featuring is the fair market value line relative to the valuation line, and you can see when the fair market value line is rising, so the stock valuation has been going up. When it's been falling, the stock has been falling. A little while ago, we had like a 1, 2, 3, 4, 5 step down in the fair market value, and the stock fell 1, 2, 3, 4, 5 valuation zones. Recently, after hitting its low at the MSG price, which is 5.5 times book value, the fair market value has been rising nicely, and the stock has been strong, although not overwhelmingly so, as we will see when I take a close look at the stock, because you can see that the stock has been the valuation just been kind of floating along its bubble price, which is 7.4 times book value. Hopefully that rising fair market value will keep propelling the stock at least along the bubble price, but maybe higher. Alphabet, having cutting 12,000 people from its payroll, might well give the earnings quite a boost. The stock has been drifting or just moving right along its MSG price. That's 5.5 times book value, and hopefully if we get a little pump here in the fair market value, we'll get the stock up to its bubble price, which has been my actually longer term target. Meta, the same story, but again, I want to give you some perspective here. Look at Meta going back to 2018. Every time that Meta has reached its bubble price, again 7.4 times book, that's been it for the stock. Well, it's coming there again, and I hope that we can set that as our target. I'd like to see a little more heft to the increase in the valuation, but I think at least we can be optimistic and bullish for now. Microsoft Microsoft, look at the fair market value for Microsoft. It's just been kind of drifting along. And indeed, the company has, as I've said before, has been cautious about its forecasts. Recently the stock had kind of stalled out. Hopefully, however, now with the breakout in the market, that we're going to get some more strength in Microsoft. However, we do have to watch because look, the last two times it got to its HB2 price, which is 12 times book value, the stock stalled out. That's going to be quite a hurdle, and we're going to have to watch this company carefully when that happens. NVIDIA is NVIDIA has, if I ignore the SVA technicals and just show what has happened to the actual stock price itself, it's been breaking out. However, it's running up against its HB6, and outside of this brief period here in which the stock actually broke out and went one more break point, the HB6 had been a 24-year high for the stock. And remember, the market has a memory, so it's going to be interesting to see if it can break out now. Obviously, what we need to see is the next earnings forecast or the next earnings report, which you see if I click on this little triangle here, it tells me that the last time that it did that was February 19th of 2023. So we got a little way to wait for that. They had a beautiful earnings report the last time. The question is there going to be powerful follow through to that or not? Now, Taiwan Semiconductor had a very, very nice quarter, so if that is a leading indicator, perhaps it will. And that may be explaining why the stock is actually kind of broken out a little bit on a short-term basis. Netflix, Netflix is going to be reporting next Tuesday. And then we're going to find out whether that terrific report that they had in the last quarter, which propelled the company, that's when it propelled the company to jump over its bubble price after being weak. Okay, it reported here in the second quarter, kind of disappointed, and the stock faded off, didn't it? But then it had that terrific quarter. The stock is broken out. It needs another good quarter, I think, to maintain that upwards momentum. Anyway, we're going to find out very soon. Apple has fallen to its HB5. It's putative HB5 because we don't know what the real HB5 is because of stock buybacks. But we will have to say that for the time being, that's what the market is doing. It is treating HB5 as being technical support, and we'll see if Apple can hold in here. Finally, Tesla. Now, this is where the news is not so good from the FANG's corner, and that is to say that Tesla looks as if it might be breaking down below its HB2 price. Now, it did that earlier in this year, but just very, very, very briefly. And remember that we have what we call our 3% 5-day rule of thumb before we declare that a breakdown has occurred. So we've got to do some watching here. Now, Tesla is reporting next week as well. So that, I suspect, is going to tell quite a tale. Right now, however, Tesla is cautioning us. Now, to briefly summarize, my summary this week is quick and easy. 5 of the 7 of the so-called Magnificent 7 stocks in general have been oozing higher and giving Given those promising words from the Fed, some of the risks in the market may have been at least modestly alleviated, despite this week's apparent setback in the inflation rate trend. As we saw from the SVA charts, the FANGs are more or less in a holding to moderately rising modality. Amazon, Alphabet, and Meta notably all look to be heading higher and are coming off strong valuation support levels. Microsoft and Nvidia are breaking out of kind of weak sideways trends. Finally, Netflix looks to be gathering its forces for its late January report, which hopefully will show continued favorable, strong earnings and sales gains. Next week should be a very interesting tale. However, we do not have a clean sweep of the FANGs. Apple and Tesla continue to be a major concern because of both their shorter and longer term potential growth outlook. Apple has shown no growth for several quarters now, and as we saw today, its fair market value measure is a full 50% lower than the current price. As far as Tesla is concerned, the electric vehicle market is looking a whole lot like the mid-1920s when everybody and his brother decided to start building gas-powered automobiles, which led to a catastrophic consolidation in the industry. Now, most stocks have been weak and are looking more and more as if they may be confirming their actual visible fundamentals rather than the dreams that I still see analysts trying to propagate. Specifically, however, I have to point out that Tesla is right now on the verge of providing a sell signal based on our 3% 5-day rule of thumb, a stock to keep very close watch over if you happen to own any of the shares. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager of McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday. This promises to be a very interesting